Welcome to Crash Concepts, where the economy, energy, and the environment are explored. Up next, fresh ideas and insights into the factors that are driving the world and shaping your future. Presenting information you can't afford to live without, here's Chris Martenson.
Welcome to this Peak Prosperity Podcast. I am your host, Chris Martenson. Increasingly, average Americans are being confronted with the obvious ways in which the presidential election is rigged by the powers that be. What's supposed to be an election is being revealed as a selection. Now, to paraphrase George Carlin, it's a small club and you ain't in it. But to those of us who follow the financial markets closely, the level of presidential rigging is both tame and infrequent compared to the level of insider rigging that happens in those financial markets. Back with us today is the man who helped us understand the flash crash of 2010 and who famously and recently won a $750,000 whistleblower award from the SEC. With us today is Eric Hunsader, the founder and owner of Nanex, a company that provides exchange, reporting, and delivery of whole market data feeds. Eric has more than 25 years of hands-on experience developing trading software, including high-performance trading applications. And Eric, it's a real pleasure to have you back. Thank you so much for being with us today.
Thanks for having me. I think I'm going to have to update that because it's 30 years now.
30 years. Well, it was 25 years, I guess, the last time we did it. It's been a couple of years. Oh, my goodness. 30 years. Well, hey, tell us about this whistleblower award. What did you uncover, and how quickly did the SEC move on that information?
Oh, boy. What a story. We uncovered the NYSC was knowingly sending data to the direct feeds faster than to the SIP, which is illegal. And we found it while analyzing the flash crash. And then on a whim, I decided to look at it again because the NYSC said they had it fixed. So I looked again in July 21st, which was just a couple months after the flash crash. And sure enough, the problem still existed. So I sent it into the SEC and wasn't really expecting to hear anything. All of a sudden, out of the blue, September 2012 comes along. NYSC is fined $5 million for providing data to direct feeds ahead of the SIP. And I fell out of my chair because I had no idea that was going to happen. So up to this point, I didn't know there was a whistleblower program. And it wasn't until a few months later, Eamon Javers over at CNBC told me about it. So I went to the website and I filled out a form and, sent it into the black hole, figuring it was, it was going to be one of those found money things if it ever happened. Fast forward to the summer last summer, I get a call out of the blue from the SEC whistleblower office. Congratulations, you're eligible for this award. And I was like, great, because it had been a long road where I had said this, and the exchanges used that opportunity to kind of paint me as a conspiracy theory person. And, I was a little upset at the SEC for not, correcting that earlier. And so I said on the phone at the time, I said, I would have done this for $1 if he just said it. Just told him, yes, he's right. His data's right. So anyway, long story short, another 8 months elapsed, or 7 months, because it, takes forever to get money out of the government. Uh-huh. Finally, it arrives by wire into my account, and they announced something in January, and I figured, I'm not really a whistleblower. I'm just, somebody who used our expertise to, and a lot of my customers were harmed by what the NYSC was doing. So, I did it as, this is what we do. We take care of our customers, and so that's why I went public with it. I wanted people to know that we were right. And all the times the exchanges told reporters that we were conspiracy people who don't understand market data, one of my favorites, was just wrong. They were wrong. to the tune of $750,000 from, the SEC. So it was vindication.
Vindication. If I understand this story right, the NYSC was basically charging a lot of money to various HFT outfits and giving them preferred access, that is, front-running access to critical data from the exchange that would allow them to then do what they do, which is basically front-run and skim off everybody. Was that essentially it?
Right. So they were selling their direct feed for, I don't know, north of $30,000 a month versus the SIP, which is under $1,000 a month, and they're not buying it because it has, that much more rich data. There's the thing that makes it worth $29,000 more is it's faster, but that's illegal. So, up until this point, they deny that that's the case, and so that's how it works. So the exchanges make all their money from their highest paying customers, which are the high frequency traders, and the high frequency traders pay the exchanges exorbitant amounts of money to have a slight advantage. So that's how the whole system works.
All right, so you supplied this information to them back when, in 2011?
10.
Okay. Yep. And then they came up with a ruling when, 2012?
Yes, September 2012.
All right. Did that in fact stop this practice?
No. That's the thing. It just still goes on. It just boggles my mind that we've shown the SEC how to use their own Midas system that they paid a high frequency trading firm millions of dollars a year, which it could have been a customer of ours for, a tenth that, but, let's put that aside. We showed them how to use that to actually see this difference, and they just refuse to look. It's just the most amazing thing. If I hadn't seen it with my own eyes, I don't think I'd believe somebody else who would say this, but I've seen it. I'm telling you. It exists, that's what's happening, and they know about it, and, the market is fair, but it's a lot more fair for some than others.
A lot more fair for some than others. So I want to get into that because it's, when I said the markets are rigged, is that too strong of a statement?
No, it's absolutely positively rigged. There's no question about it. It's rigged on many different levels in many different ways. But, for example, no retail order ever gets to see the light of day at a stock exchange. That's one of the many eye-openers that, people who aren't really, are pros in the market don't realize that it's all a big game.
Well, I'm looking at some headlines recently again, and it seems that retail investors have been just pulling out of the markets. I have, in large measure, because I think the system's rigged. How much do you think that we see retail, so-called mom and pop investors pulling out of the markets because they think the system is just working against them?
Well, I want to clarify something. So, a lot of people, when they say, "Oh, the market's rigged," many of them, I won't say all of them, but many of them are saying it's propped up. The prices are being propped up by the Federal Reserve and whatnot. Now, I don't subscribe to that. I don't have any tools to see that. There's no way for me to verify that. I think long term, you're better off in the market than not in the market. So that aside, you just have to, what I see is when you buy and sell, you are always paying more than you should. You're getting, unless you know the ins and outs, you're getting ripped off by a small amount every time. And maybe you don't buy or sell often, and that's great. I don't myself buy or sell often, but I do have funds in my 401k, and they do. And so you're affected by it one way or another. It's costing everybody, a percentage return. At the end, when you retire, you're going to have less than you should have otherwise.
Well, I want to talk about this idea of how the markets might be rigged on a more fundamental basis. Using some of your own data, I was really taken with a chart that broke down by hour how U.S. stock futures performed, or how much of the gain in the overall S&P could be explained when we looked at which hour of the day was involved. And it turns out 2 a.m. is very important to U.S. equity futures and the U.S. equity market in general. Can you explain why is that? What's so important about 2 in the morning?
Every once in a while, I do look at fundamental things longer term, and when I did that study, I had to verify it many different times, many different ways, because I just didn't believe it. Basically, between 2 and 3 a.m., you buy at 2 a.m. and sell at 3 a.m., you would have captured half of the gains and none of the drawdown since 2005, which is just unbelievable that you would have that kind of weight. You would expect every hour over a long period of time to be equal. Right. It should be, randomly equal, but certainly not. That early morning hours really stands out, and I don't have an answer. The only things I can think of is it's before Europe opens, and maybe people who have, squirreled their money away in the Cayman Islands or what have you are putting it to work at that time. I don't know. Well, I'd like an answer.
It strikes me, it's like that's one of the thinnest market hours. And of course, if you are going to try and move a price, you would want a thin, not a thick market. But, it's one area that one of the analysts at my site has dug through is looking at gold and silver and noting certain trading patterns and ran a number of algorithms to sort of parse through the data and discovered that even with something highly volatile like natural gas, when you sum out all of its moves over time, you get to zero, which makes sense, right? And this is true for a lot of commodities, but not for silver. There was a very, very noticeable drawdown that was not explained. It didn't wash away. It just got worse over time. So somebody's discovered a way, mostly using the overnight time slots to drive prices down, and whatever mechanism they're doing, but they do it over and over again. And so, Eric, my question is, somebody who looks at the markets as closely as you do, I would have thought that something like the 2 a.m. for U.S. stock futures or the repeated smackdowns in silver would get competed away over time somehow.
It should.
It should, right?
I would have thought after I first published those, that chart last August, I would have thought it would have been ameliorated or something would have shifted, because now the information's out there and people are going to, I know a lot of people saw that chart and it was widely talked about. So I would have expected an effect, and the effect seems to be that it's accelerated to be more pronounced than it was before.
Yeah.
There's a couple of other oddities, like, for example, between 3:30 and 3:45, if you compare that 15 minutes with the next 15 minutes, 3:45 to 4 p.m., they're polar opposites over long periods of time. And that again, is also a fascinating thing that's come out of the data that I hadn't looked at before, that's more of a fundamental nature. And I don't know the reason for that.
Well, is this possibility, that the ecosystem of algorithms that are now dominant in the marketplace, that somehow this might just be an emergent property of all the coding that's happened, and so because these are trend following and pattern spotting algorithms in many cases, that they do it because everybody else is doing it? Is it? It's
possible. Yeah, sure. It's possible.
Well, it sure sticks out. And you had a rule of thumb that stuck out for me. You said the more obfuscated your fill, the more you got screwed. What did you mean by that?
So, this is fascinating. This whole discussion, this whole IEX application process is just so highlights how the SEC, the Securities and Exchange Commission, is not really there for, their mission statement is for the, average investor for capital formation, blah, blah, blah. These guys are listening straight to whatever Citadel tells them, whatever Hudson River Trading tells them they're doing, regardless of what's in the regulations. And, we saw them do this with the whole IEX application. And not only did they not grant IEX an exchange status, but they want to table it and they want to talk about how fast is too fast in the marketplace. And because this all came down to this 350 millionth of a second delay that was essentially going to protect an investor's order. So when you put a large order in the market and you have to go to multiple exchanges, what happens is it goes to one exchange. As soon as that executes, the high-frequency traders on their expensive data feed sees it, and they change and front-run you before your market order gets to one of these other exchanges. So this 350 microsecond delay was not going to let the high-frequency traders able to see the signal and front-run your order. And that's what the whole controversy is about. And now they're trying to say, well, 350 microseconds, you can't delay. That takes too long. At the same exact time is on your brokerage statement. I invite you to look at your last trade on your brokerage statement, and you look at the timestamp for that trade execution, and you tell me what the resolution is. Is it down to millionths of a second? Is it milliseconds or thousands, or is it seconds, or is it minutes, or in some cases is it a day? Sometime today you bought this stock at this price. Mm-hmm. The thing is, if you had those timestamps that said at this millionth of a second today you bought or sold this stock, you could take that information to a third party who could say you got a fair price or you didn't get a fair price. And if you could do that, then these firms, these internalizers who take all the retail orders, would now have to compete in a capitalist mode where they can't hide anymore what's going on. So one thing a lot of people don't realize is in 1 second of time, the price of a stock will and actually does change quite a bit in 1 second. And when your timestamp resolution says, well, sometime in this minute you bought it, they can fill you at any price that they think they can get away with in that period of time. And I guarantee you it's not going to be the best price for you.
Oddly, somehow that won't be true.
So, I'm not big on rules. I'm big on transparency, and one of the ways to get that transparency is to require all stock trade executions. And your statements should have high resolution time. It can't be punched to the minute or even the second. And now, maybe you as an individual trader don't really care about that. But, however, you wouldn't be able to, maybe you can't do anything with it, but you could, again, go to a third party and say, did I get the correct price for this? And with that information, that third party could tell you that. But without that information, it's hard to say.
Yeah, now this is all a super fascinating story, and I've been following it closely since Michael Lewis came out with the Flash Boys and all of that, and Brad Katsuyama as one of the stars of that story. He was going to start this IEX exchange, which was going to compete with all these other ones that you're talking about. And if I remember the story right, they were going to just take fiber and just spool it up in a shoebox so that it would just have the certain latency in the signal that would then protect the order flow from being front run. And right. I just noticed in the New York Times, they just noted this. They said, and I'm reading here, among the objectors to this new exchange is the New York Stock Exchange, which would face a new competitor in IEX if it received approval from regulators. In a letter written last November, a big board official said IEX as proposed would be an unfair, complex, and opaque exchange. And so it was striking last month when the big board asked the SEC to let it imitate IEX by adopting a new trade type based on a technology invented by IEX.
Yeah, it's just amazing.
Tell me, is that as bad as it sounds?
It is. It is. It's just, it's so hard to believe that, these guys are actually, I think they're so used to getting away with it, they just don't realize that, the average person, if they understood it, is going to, feel revulsion toward this type of thing. I mean, it's certainly not an American thing to do, to use the regulator as a way of getting past your competitor. And what's fascinating, maybe the New York Times didn't mention this, but a month and a half ago, the NYSC came out and big picture of the CEO. NYSC calls IEX's plan un-American. It's like, oh God. You
I'm gonna have to laugh.
At that, you just shake your head. It's like, wow.
Wow. So, yeah, I mean, to summarize, so they're calling IEX unfair, complex, opaque, un-American, And then they're saying, and oh, while you're blocking them, we'd love to emulate them so that we can steal their business before they can get off the ground.
Yep.
Is that the whole? Is that the whole?
That is accurate. That is quite accurate to what's going on.
Well, so yeah, that's just so. Again, for me, as somebody who's not, thankfully up to my eyeballs in Wall Street every day, but the more I hear these stories, Eric, the more faith I lose in the whole system as anything even remotely worth trusting.
Yeah, that's kind of how I feel too. I mean, I've learned not to believe anything written in the Wall Street Journal or Reuters or Bloomberg, and because of that, because I've seen them actually say things that are incorrect, and they know they're incorrect because I've talked to the reporter about it. I now look at the other news stories with the same lens, and you just wonder how common it is.
Well, and unfortunately, in my experience, it's common across all sorts of different sectors, geopolitics, you name it. We had other big news come out today, which was the Goldman Sachs paying up a $5 billion fine for mortgage fraud. And I noted, again, 0 criminal indictments one more time.
Yeah,
and after,
amazing.
Yeah, after watching the other Michael Lewis, The Big Short, the movie based on his book, I can't help but feel that Goldman didn't just get off light here, but scot-free. I mean, I know they paid a few billion and everything. That hurt somebody somewhere, mainly shareholders. But again, what they did was just astonishingly, brazenly illegal.
Yes, this is true. And it was, what's fascinating was 5 days ago, Krugman did a piece, an op-ed in the New York Times, saying that, the big banks essentially didn't really do anything bad. It was these little players. Well, that was just before the Wells Fargo major fine last Saturday, and then Goldman's fine. I mean, just literally days before. Like, you have to be out to lunch to write something like that. It's just, if people don't really read between the lines and educate themselves, and they just believe what's in the news, they're going to be misguided, no doubt.
Well, yeah. What's the old saying? If you don't read the newspaper, you're uninformed, but if you do, you're misinformed.
I'd never heard that one.
I think that was Mark Twain. So it's maybe nothing new under the sun, but from my perspective, I'm sitting here watching all these hijinks. I'm watching central banks try and go into negative interest rate territory. They're talking about helicopter drops of money now. Ben Bernanke's opining on that. This all is starting to feel a little crazy to me. And so it feels like we've got this nutty ecosystem of high-frequency computers that are just literally out of regulatory grasp and control, maybe even just on an intellectual level. They don't know what's really happening there, if anybody does, really fully, completely. And on the other side, we have central banks pushing us into brand new territory. Is it at all wrong to be concerned about another flash crash or something like that here?
Well, the flash crashes will now be limited to 5 or 10% move, like we saw on August 24th. I personally think, when you get a big cap stock that suddenly, reprices 5% and then returns is not a good thing for the markets. I think you could comfortably not have to put in stops anymore. In fact, I would kind of recommend you don't use stops, because if your stop is 4.99% away and the limit up, limit down level is right below you're in danger, because you're probably going to get stopped out and it's going to ricochet right back. All these Band-Aids, all these things that they've had to add, they discourage you from using market orders, for example. To me, I think that's one of the signs that you don't have a functioning market, is when a market order is dangerous, or at least that's what they say. Flash crashes, yeah, we're definitely gonna keep having these events. They're gonna be contained, but again, the flash crash didn't go down more than 10% and back. So the Band-Aids they've got in place essentially were limited to maybe half of that. Still, I think it's, we could do better.
And how would we go about doing better, given that the SEC is showing very little appetite for actually getting in here and regulating anything, from my perspective?
Well, they know. All they had to do was let IEX be an exchange. I think, that is one of the free market solutions that will help self-correct things. One of the problems is the exchanges have legal immunity. I'll say that again because
what do you mean?
some people that like they can do something that a normal business would get sued for, like rip you off. Like, for example, charge $500 million a year for the SIP, which is the consolidated feed, and not give them real-time prices, which they're required to do. And if you try to sue them, they'll say, "Oh, we have legal immunity," and the judge will say, "That's right, they do, because there's SRO, self-regulating organization." And that is one of the mechanisms to self-correct in a capitalist society is that legal action. You've got rules, and this guy's not following the rules. So how do you fix that? Well, either you've got to have a regulator come in and do their job, which obviously is not happening, or the legal process will fix that. Or you could have a competitor come in and offer a better service and not do that nefarious thing. But the SEC is in control of all these things because they're the ones you should be telling the exchanges to behave themselves. They're the ones you have to go to create a competing exchange, and we're seeing what happens there. So there's no real mechanism here to self-correct. If IEX becomes an exchange, they're now the first ones who are not going to tolerate a lot of the crap that's going on, that they'll be able to see as an exchange, and they'll be able to do something about.
And presumably take a lot of business from the established players.
I would think they would, yes.
Well, so I of the people I've talked to, it sounds like endowments, pensions, institutional funds, those who have interest in buying and selling large blocks, they just don't like having their pockets picked every step of the way. I would imagine they would be some natural.
Oh, sure. So IEX had over 300 comment letters on the process, and all of them, everyone except for Citadel, Hudson River Trading, and the existing exchanges, wanted IEX to become an exchange, including Norges, which is the largest fund in the world that manages Norway's wealth fund. Many teachers' retirement funds in the United States. Big names, T. Rowe Price, big names came out. Even Virtue Financial, who seems to be one of the good guys out there, all wanted IEX to be an exchange to get approval. Even Goldman Sachs did. And there's an overwhelming. If you drew it out, the number of people who are for IEX versus against, it's just amazing how a small handful of people are controlling the whole process.
And who would that be? I mean, you mentioned like the Citadel and some other big players like that. So I assume there's some big entrenched players that have, I don't know, is this a revolving door situation, or how do they hold their power?
Yeah, it's existing exchanges, and the SEC is actually being controlled by the Senate Banking and Finance and House Ways and Means. And that's where they get their marching orders from. And those guys are getting political donations. And they're bamboozled. They don't understand why this is so important. And it's so easy to bamboozle them. And I think that at the bottom line, it's like, well, if you want me to keep funding your campaign, Senator.
Uh-huh. Yeah. Well, so, as I look across the landscape, I see all sorts of crazy stop running price manipulation, just things like bids getting pulled and volume disappearing and crazy stuff. I see it in the oil market. I see it all kinds of places. I'm wondering, are there any corners or crevices of the marketplaces that haven't been taken over by these algorithms that remain relatively free and fair?
I don't think so, no.
Even the Treasury market seems to have gotten its...
Oh, absolutely. Treasury market is totally infested. I got to see the Fed analysis. Well, this is fascinating, little story. There was a Treasury flash crash, October 15, 2014, which was, every bit as bad as the stock market flash crash, except it was in Treasuries. And the Federal Reserve wanted to get to the bottom of it, so they got people together to analyze data, and they had to break them into two teams. One team got to look at the cash market trading data, and the other team got to look at the audit trail data from the CME, which told who was buying each order, but they weren't allowed one team wasn't allowed to see the other data set.
Okay.
This is the Federal Reserve.
Uh-huh.
And it's like, well, if you want to analyze this properly, because I talked to them about this, if you want to analyze it properly, you have to look at both sides, because that's what's going on here. You've got to see how the cash and the futures relate.
Well, yes.
But they were specifically not allowed. The same people on the team that looked at the Treasury data were not allowed to see the cash market data, and vice versa. This is data that's extremely hard to get because it's audit trail level. It tells who's behind each trade or order.
Yep.
And so I got to see some of the stats from the cash side, and it's just amazing the percentage of wash trading going on. The putting in fake orders, and the level of spoofing, the level of just bad acting happening.
And by certain, I know you can't reveal much, but were there certain bad actors that
Yes, there were, and I actually had a list of them, and I can't remember them, or I'd actually tell you who they were. But they were the name. I probably mentioned a name or two already. That were these actors that are they're the same names everywhere else. They're just once again it's the top 10 of them pull away the lion's share of the profits, and they totally dominate that market.
Yeah. Yeah. So, how do we summarize all this? Perhaps if we had an outrage meter going from a sedate 1 to an apoplectic 10, where should we be?
I've been at apoplectic for so long. I'm just,
That's your new one?
I'm spent. It's just nothing would surprise me anymore. I honestly don't know how this is going to get corrected. I don't know. I know it can't go. It can't continue.
Why not?
Because eventually, the guys who are in control now, the small group, will eventually whittle down to even smaller because of greed. And I think that's at the point in time when the senators is going to have enough, or somebody's going to get outed, or something's going to get leaked that is so damning that it finally gets cleaned up.
Perhaps that's part of the fear of having one of these potential presidential outsiders actually come into the hen house, as it were.
Well, that's what it looks like to me. It's pretty amazing to see how that politics is working there, and relating it to what I know about what goes on in Wall Street. Lots of parallels there.
Absolutely.
It's the illusion that you have. It's the illusion that you have control, that the citizen has a say and is listened to. It's an illusion, though, and you'll believe that. And if you don't believe it, you'll be tagged a nut. But I really want to. I'm dying to see how the Republicans handle the monster that they've got. And I just don't know how they're gonna resolve it.
Yeah, it's very interesting, and I brought that up because it feels like a parallel. It feels like, to me, the vibe of the country is that people are starting to understand the degree to which certain things have been rigged. And the Federal Reserve comes out, and Janet does her friendly grandmother act and pretends like they had no idea that Granny was going to get thrown under the bus, or that savers really actually are being hurt in this story, or any of that. But they know perfectly well what they're doing, and the jig is about up on what they've attempted, and it's hurt a lot of people who accept. It's also helped a very, very small number of people, and that's getting really hard to ignore and overlook anymore.
Yeah, it is. I don't think people will never revolt over Wall Street ripping them off, but it's definitely more than one straw on that proverbial camel's back. Mm-hmm. That if people perceive that the elections are truly rigged, that might be enough. That plus other things going on that they see is enough to cause a different reaction than otherwise.
Well, I think that's certainly what's, I won't say at risk. I think it would be a good thing to have get the Band-Aid ripped off, get a little oxygen and light in there for a while. Because this has been, this system of control, of rigging in favor, force a few against the many, is, I just think, fully been revealed and exemplified by what you've been doing. And certainly you opened my eyes to the degree to which these people can do what they do. But it's nothing personal. It's just human incentives. Humans respond to incentives. And if people can game a system, they game a system. And that's the nature of all of human existence. So nothing really new under the sun here. But boy, the tools they've got at their disposal now are just, I can't even keep up with it, Eric. Like 10 years ago, I had some sense of what was going on. Now it's I'm not really clear what's happening anymore. Got to confess.
Right.
Well, thank you so much for your exposing all of that and helping us understand it and stay abreast. And I'm glad you do. I follow you on Twitter most closely. That's at Nanex LLC. You've got a website, nanex.net. Is there any other way that somebody can or should follow you?
I usually post commentary on my Twitter feed. I just find it's easier to reach lots of people that way.
Mm-hmm. It's a great way, and you do a wonderful job keeping us up to date there. So again, at Nanex LLC, you'll get there, Nanex LLC. So Eric, thank you so much for your time today, and congratulations on the Whistleblower Award, which you almost didn't know you were entitled to.
Yeah, thank you, Chris.